All right, earlier we were looking at the market reaction to war. Russia invaded Ukraine by land, air and sea today. Russian President Vladimir Putin said he had ordered a special military operation to protect people, including Russian citizens, that he says are subject to bullying and genocide in Ukraine. That's an accusation the West has called absurd. Well, stocks and bond yields fell. The rand weakened by around 2.5%. Currently it's trading at around 15 rand 47 to the dollar. And of huge concern for economies like South Africa are food prices and oil prices. Now, oil soared well above $100 per barrel today for the first time since 2014. Let's discuss. We're joined by Maudi Lentsoane of Lehumo Investment CEO. Maudi, thank you for being with us as always. So petrol went above 20 rand per litre. We're now looking at a price above 21 rand in March, according to the AA. How high do you think it can go in light of today's events?
Yeah, well, I mean, I guess today's events very unfortunate. We're just looking at a situation where the global economy was probably looking to recover from, the aftermath of COVID-19, and I think there was a glimmer of hope that 2022 will certainly be a positive one. Nobody expected that somebody will decide somewhere to begin a war just when the economy needed all the support it could get. So very unfortunate, and I think the result is going to be very catastrophic for the global economy. It's going to be a massive setback. I mean, you just look at what the role that Russia plays in the global economy from an oil production perspective. So that is immediately causing a lot of problems, particularly when it comes to, the shortage, in terms of the shortage of supply for oil. You've heard about the sanctions that have been implemented. So immediately that says, the oil price is going through the roof. We've seen it already hovering around the $100 a barrel. The rand has weakened, as we've mentioned. All those factors mean tough economic times ahead.
Yeah. Could the petrol price, it's been predicted, could it go above 30 rand per litre?
Look, anything is possible. I mean, it all depends on how high the oil price and also combined with the currency weaknesses that we've seen, how high they can go. So it does really cause a lot of problems. We have also had, not so great news within the sector that SABC suspended production at their refinery in Durban. This is a couple of weeks ago. So already that tells you we're not producing locally. That means we need to go and import the majority of that oil. And that, unfortunately, is going to be very inflationary for South Africa.
And it was a scandal in South Africa that we sold off our oil reserves. So in light of what is happening right now, we're already a vulnerable economy, but even more vulnerable because of that. We have to import oil to make fuel.
Yeah, it's the worst time. It's really a worst time to be, heading into the market and looking for anything, whether it be, some of the produce that we buy overseas. We know we don't produce everything that we utilize here domestically. We rely heavily on some of the imports. So you are going to see an imported inflation. We've seen the rand already coming under severe pressure, together with a whole of other currencies across the globe. So that's going to be very inflationary, for just specifically on that oil matter. I mean, we've ran out of reserves. Your biggest refiners, they've shut down one of the largest refineries in the country. And that means we rely heavily. We are very vulnerable to the international prices that are fluctuating at a rate that is so unsustainable.
Yeah. And both Russia and Ukraine, big grain exporters, do you know how vulnerable we are in light of that as we import wheat and some of the grains?
Yeah, so South Africa, we import the wheat. We rely heavily on the international markets. This is certainly going to cause a lot of disruption, not only for South Africa. I mean, even from other countries. For example, Europe is heavily involved. South Africa is the largest trading partner with Europe. So Europe is immediately involved in that argument there in Ukraine. So you can see already that there's going to be a massive disruption just in terms of our neighbors or the trading partners that we do business with. They are directly impacted And as a result, that will have a negative impact, an indirect negative impact on South Africa.
You said this could be catastrophic for the global economy. I mean, we're already looking at South Africa in the context of other economies growing, and our recovery has faltered. Stagnant growth for almost a decade, the finance minister said yesterday. So this is just very hard to stomach right now for our own economy.
No, it is. Francis, we're not out of the difficult period. The COVID-19 is not completely out. There was a bit of hope. Yes, the numbers have gone down. We're not ruling out the possibility of another variant coming through with what is happening. A disregard of the restrictions in some parts of Europe and of course now in Ukraine, where because of this war, I'm sure it's really just people trying to really take cover. So very catastrophic. We're not out of that danger in terms of COVID-19. And of course, on top of that, we have to have the war. And that's going to be negative. Just specifically for South Africa, we know that Eskom got the increases that they needed. We've got now the rand coming under pressure. We've got a whole host of difficulties that we're facing ahead. And the electricity prices are going to increase. The food prices are going to increase. I think we've got to fasten our belts, and it's going to be a very tough time ahead.
Yeah, even though we're very hard from the action. Maudi, final question. Often we see markets bouncing back pretty quickly, even in light of dire circumstances around the world, geopolitical tensions. Sometimes we see the markets even soaring when things look pretty bleak, detached seemingly from the reality. Do you have any confidence this could be a quick bounce back or not this time?
Yeah, look, I think what will determine whether it's a quick bounce back or not is how long this conflict lasts. If it lasts longer, then we're certainly going to begin to see the impact not only being felt. I think the impact currently is being felt on the market, which is normal, which is to be expected. But the problem will be once we begin to see the impact of this war moving towards the economy and beginning to affect the actual economy, the underlying economy. And that's where we're going to see problems. At this stage, if it's a short-term thing and next week it's back to normal, so the market would have just sold off and it will quickly come back to where it was. And hopefully the economy hasn't really taken much in terms of a negative impact. So I think it all depends on how long this carries on for.
All right, thank you very much, Maudi Lentsoane, CEO of Lehumo Investments. Let's take a short break. Lots more to come on The Full View.